Hello, everyone, and welcome back to the Tesla Stock Podcast. We have a show today that perfectly encapsulates the duality of investing in Tesla right now. On one hand, we have a looming courtroom decision that could technically wipe out years of the company's profits in the blink of an eye. On the other hand, we have Wall Street analysts looking past the financials entirely, raising price targets based on a future of billions of robots. And somewhere in the middle, the actual engineers at Tesla are quietly pulling off miracles with the cars themselves. With Tesla stock currently trading right around the $400 mark, we are at a fascinating crossroads. Let's dive into the legal time bomb, the AI hype, and the incredible engineering diet of the Model X. Let's start with the financial story that is lurking in the background, one that could have a massive impact on Tesla's bottom line very soon. We've spent a lot of time talking about the new trillion-dollar pay package that shareholders just voted on. But Reuters has published a deep dive into the much more pressing concern, the old 2018 pay package that is still tied up in the Delaware Supreme Court. Here's the situation. A lower court invalidated Elon Musk's record-breaking 2018 compensation plan. Tesla has appealed that ruling. If Tesla wins the appeal, things stay as they are. But if Tesla loses the appeal, they have a massive problem. The company has promised to give Musk a replacement stock package. The issue is that accounting rules would require them to value that replacement package at today's stock price, not the 2018 price. According to estimates, this would trigger an accounting charge of roughly $26 billion. To put that massive number into perspective, $26 billion is more than half of Tesla's total net income since the company became profitable in 2019. If this happens, Tesla would have to book this charge over about 8 quarters. This would reduce the company's reported profit by over $3 billion every single quarter for 2 years. Now, the bulls will tell you this is just a paper loss. It's a non-cash expense. It doesn't drain the bank account and it doesn't stop the factories from running. But corporate governance experts warn that this is a massive transfer of wealth from shareholders to the CEO, diluting everyone else's stake. As one attorney quoted in the report put it, "Without question, you are hurting the shareholders." Usually, a hit to profits of this magnitude would tank a stock. But as the report notes, Tesla often operates in its own financial reality where fundamentals matter less than the vision. It is a massive overhang that investors need to be aware of as we wait for that court ruling. But if the legal situation is the storm cloud, the AI narrative is the ray of sunshine powering the stock's recent resilience. Our second story focuses on why the stock has been climbing recently, even amidst this uncertainty. Elon Musk recently spoke at the Barron Capital Investment Conference, and he was in full visionary mode. He reiterated his belief that robotics will eventually be the largest industry in human history. Musk painted a picture where there are more robots than humans on Earth, performing everything from factory labor to surgery. He even quipped, "Who would not want their own personal R2-D2 and C3PO?" This focus on the future is resonating with Wall Street. Following the conference, Stifel analyst Stephen Gengaro raised his price target on Tesla to $508, maintaining a buy rating. This upgrade wasn't based on selling more Model 3s next quarter. It was based on the performance of full self-driving and the potential of the Optimus robot. The analyst believes the AI valuation is starting to get unlocked. Musk also mentioned that Tesla might have to build its own gigantic chip factory to ensure it has enough computing power for this AI future, further cementing the idea that Tesla is morphing into a tech infrastructure beast. It's clear that for many investors, the car business is just the appetizer. The main course is the robot army Musk keeps talking about. This is why the stock can shrug off potential accounting disasters. The market is pricing in a future where Tesla dominates the physical application of artificial intelligence. However, while the CEO dreams of robots, the engineering team is still doing incredible work on the cars we drive today. Our final story is a fascinating look at the refreshed Model X. In an era where every new car seems to get heavier due to safety regulations and complex tech, Tesla has achieved the opposite. Car and Driver recently tested the new Model X and found something surprising. It weighs over 400 pounds less than the previous version. That is a massive weight reduction, especially for an electric vehicle. And the most impressive part is how they did it. They didn't switch to expensive, exotic materials like carbon fiber, which would have driven up the cost. Instead, they did it through rigorous, smart engineering. Lars Moravi, Tesla's VP of Vehicle Engineering, explained that they re-engineered almost everything under the skin. They switched to a lighter induction-type rear motor, they optimized the wiring packaging, they redesigned the cooling system, they even removed 50 pounds just by changing the mounting pedestals for the rear seats. The result is a car that is more efficient, handles better, and has an improved EPA range of 325 miles. This matters because it shows that Tesla hasn't lost its edge in manufacturing. While legacy automakers are struggling to make profitable EVs, Tesla is finding ways to make their existing cars lighter, cheaper to build, and better to drive. It's a reminder that beneath the trillion-dollar hype and the courtroom drama, there is still a world-class manufacturing company executing at a very high level. So, to recap, we are facing a potential $26 billion accounting hit depending on a court ruling in Delaware. Wall Street is countering that risk by betting on Elon Musk's vision of billions of humanoid robots, pushing price targets over $500. And on the ground, Tesla's engineers have successfully shaved 400 pounds off the Model X, proving that they are still the masters of EV efficiency. This brings me to my question for you this week. How much do you care about the accounting? Does the potential $26 billion profit hit worry you as an investor, or do you view it as just paper noise that is irrelevant compared to the long-term potential of the robot army? I really want to know if the financials still matter to the retail investor. Let me know your thoughts in the comments below. As always, if you enjoyed the episode, please make sure to subscribe and turn on notifications. Thanks for listening, and I'll see you in the next one.